When it comes to growth, the mid-cap IT companies gave the large-cap ones a run for their money in 2012, with many even beating the NASSCOM growth forecast. The story may well reverse this year.
Even as they wait for an economic revival in the US, mid-cap IT companies are bracing for a tough 2013. Ritu Singh with the story.
2012 may have seen the Indian IT industry hit the magical $100 billion mark, but there was little else for the big boys to cheer. The year belonged to mid-sized IT companies like Geometric, Zensar and Infotech. One look at the stock prices and the story is clear. The mid-caps had managed to do well as corporates in both US and UK gave smaller tech contracts of shorter durations, more suited to the smaller IT firms. But will the story continue in 2013?
The big boys are struggling to give a commitment for a higher percentage growth, whereas the mid-caps, who have seen some robust growth in the last year, are now at a critical number where trying to replicate the same percentage growth may not be possible.
Having reached that critical size, analysts believe it's going to be tough for mid-sized companies to scale up in 2013. Their presence in limited markets and their narrower service portfolio will only add to their disadvantage.
What happened in 2008-2009 at the crisis, it was just a pain of like 4 to 6 quarters. But this current, the bad scenario what you're seeing right now is a pain, it's a prolonged pain.
But companies insist there is sufficient pent-up demand to drive growth in 2013.
I see that there's a little bit of an on-off switch happening with these decisions. There has been sufficient delay in the IT decisions over the last few years because of uncertainty that the IT now needs to be replenished.
After a dream run in 2012, mid-cap IT companies are bracing for a slower, tougher new year. The gains may be capped, but if there is a pickup in the IT spend, then even the mid-sized companies will join the party. Ritu Singh, ET Now, Mumbai.